Hello, and thank you so much for joining us. My name is Rhonda Schaffler. For the next 20 minutes, we are going to be talking about the complexities of cross-border investments, as well as ways technology can help. I'm so pleased to be joined by two men from Interactive Brokers, Frank Magnani and John Seberg. Welcome, gentlemen. Now, before we get into it, I want to remind everyone, we want to hear from you. So please use our text chat to the right of the screen. You can post questions, engage in the discussion with us, and we'll incorporate as much as we can into the chat today. All right, we're going to get started. And again, Frank, John, great to have you here.
Thanks, Rhonda.
So let's start, Frank, actually with you, because we've had two giant mega events that have impacted global asset management. The first one, which feels a little small now, is Brexit. But then we had the pandemic. So big picture, what was the impact?
Well, first of all, thank you, Rhonda. And John and I are delighted to be here and to be part of this program. Brexit, we all knew it was coming, but we didn't know whether it was going to be approved. And when it was approved, it kind of sent the investment community in a little bit of a tizzy, because we were no longer permitted, unless you were registered in those jurisdictions, to conduct business. So as a measure that Interactive Brokers took, and so some of the other firms, we opened additional offices in Dublin, in Luxembourg, and most recently in Hungary. Which is our Central Europe location. I think one of the biggest impacts really involved the U.S. registered broker-dealer. The U.S. registered, it could be a broker-dealer or an advisor that had a number of European accounts, but he wasn't registered in any of those jurisdictions. So as a result, he had to either let those clients go, or basically go to the custodian and ask for an exemption. And the exemption would be based upon whatever the local regulations are and how many assets they have under management and how many accounts. So in those circumstances, really many of the investment advisors had to change the way they were doing business. Then what happens? We get the pandemic on top of Brexit. And as a result, that really sent Wall Street in a tizzy. All of a sudden, you have individuals that are working in an organization, and now we're scattered all over the United States, all over Europe, working from our homes because nobody wanted to go in. So I think that the biggest impact that the pandemic had was us being able to react with the technology that we currently have at hand. And one of the things that we have done, and I know some of the other advisory firms have done, is that we set up a virtual private network. And as a result of that, we were able to continue on servicing our advisors and their clients pretty much throughout the world in all the different jurisdictions, in all the different time zones. But it was quite challenging, because what are you missing? You're missing the collaboration of working with people together, hand in hand. And, when you have two situations like that back to back, it really changed the whole scenario on how you're going to manage your business going forward.
Yeah, absolutely. John, what can you add to that? What was kind of a personal experience that perhaps you had through these events?
So I've been in the business a long time. I'm a 20-year veteran of Interactive Brokers, and I think the real impact is the life-work balance. We all can talk about that. From a technology standpoint, to be quick on our feet was really important for us, and really offering that technology to clients really as an adjunct to what we do well, and showing our strength that way, to say, we're with you, we understand you. On a personal level, again, life-work balance. And I like to mentor people in my organization. So that was a little more difficult, a little more challenging. We're back in the office in Greenwich, so we'll get back in at some point.
Frank, you talked about opening these other offices. You talked about being nimble with technology during the pandemic. What are the long-term implications on the way assets will be managed as a result of these events? I mean, what is here to stay now that changes your business?
Well, I think from an investment standpoint, the way advisors manage money is not going to change. The way they interact with their clients is definitely going to change, right? Because we have the technology in place. So the technology to have access to the markets, that hasn't changed. To have access to research analysts, that hasn't changed. But what really has changed, the in-person meeting, dealing with your clients. How are you going to deal with them? Some of the clients are more prone to using the internet and going on Zoom meetings, where you have an older population that perhaps is not that proficient. And from our own experience in dealing with some of our colleagues, it was quite challenging sometimes, getting up and doing these Zoom meetings and working with different individuals, because it's not the same. And I think that over the last several months, many of the clients and the advisors have really been able to react very positively to changes in technology. And as a result, it's a lot easier now to communicate. You can communicate with pretty much anyone around the world. You don't have to hop on a plane anymore. You do a quick Zoom meeting or Microsoft Teams, and 1, 2, 3, you're connected. You can have a talk, and it's pretty terrific. I think also when you look at what has happened, usually the portfolio manager is right next to the trader, and they're able to interact. And when you're in separate locations and you're working on Teams or you're working on Zoom meetings, you kind of lose that collaboration. So I think in the beginning was difficult, but now I think most advisors are getting used to the way you conduct business. Wouldn't you agree, John? I mean, pretty much.
I do. I mean, one of the biggest hurdles is what's the right custodian for an advisor in this environment? What decisions does the advisor make in this environment?
What about, John, hurdles on a global scale for advisors? I mean, what has changed on that front?
Great question, Rhonda. So basically, the way we look at it is the hurdles are, the challenge for the advisor is choosing the right custodian for execution, for market access, for CRM reporting, or for portfolio analyst reporting, and other tools that basically, the challenge for the advisor is not having to buy third-party vendors all over the place to have one custodial account. The advisor space is the most investable space that is probably disrupted by technology the most easiest. So as an advisor thinks about who their clients are, where their clients are, can they expand their business with a custodian that has access to allow them to trade across accounts across the world, the ability to allocate a portfolio because you've attracted a client from Luxembourg or from France or from Hong Kong. What's the hurdle for that custodial to offer that? So IB can offer that.
And John, also, going with a custodian that has access to all the world markets is really a plus, right? And also having the capability of trading in all those markets, plus having the service people in charge of those areas to really help that advisor during that particular time zone.
Right.
So let's stay on technology for a moment. And before I ask the next question, I just want to remind those who are listening in, feel free, A, to post a question you might have, or B, to take our poll, and we will share some results. So Frank, focusing in now on technology. So why, when you look at, you're a very technology-driven firm. So what is working? What makes your firm unique? What can others learn from you and what you're doing with technology?
When you look at the history of our firm, first as Timber Hill and then as Interactive Brokers, kind of side by side, our chairman has always been driven by technology. That's the one underlying factor that really drives this firm. And when our colleagues from other firms look at us, everything that we do is proprietary. We have our own trading system. that was designed and built by traders working and developers and programmers that work at IB. So today, we're connected to 135 markets in 33 countries. They're able to trade in 23 currencies. We are able to offer over 100 order types to advisors, to clients worldwide, whether that's regular straight orders or algorithmics. In the other important thing that we do, which is really looked at quite closely, is that we offer real-time risk management, and that is a big plus, not only for us as a firm, but also for the advisors in managing the risk of their portfolios, of their investment decisions, so they know exactly where they are. In addition to that, complementing that, we also realize that you can't always be in your office managing money. So we came out with mobile apps that you can utilize on your iPhone, on your notepad, and you don't have to be in the office. If you're at a client meeting and you want to look at their portfolio, you can simply pull out your iPad and look exactly where you are. And then we also recognize that there are some advisors and that may not want to use our own proprietary products that we offer. So we offer a broad array of API solutions that they can connect to go to third parties. Also fixed connectivity to third parties as well with systems and different things like that. And then I would also say that, the advent of not really having paper and having everything electronic, to generate a report in real time online in a matter of seconds, to go to the stock loan division of a firm, and using our platform, you can tell almost immediately that if you want to borrow a stock, it's there. And this is all automated. And when other firms look at us, we've been doing this for a very long time. For some of the other firms to do this, it will take years to catch up because a lot of their infrastructure is built on legacy systems, and it takes time to replace those legacy systems with new ones. So that's that would be my view on the technology-driven aspect of our business.
So, John, maybe you can add in on this. What problems are still there to be solved that technology can do for you? I mean, what's kind of like the next leg to go here with technology?
Right, Rhonda. So basically, we all think of technology streamlining a process. But we've added tools for the advisor to manage risk, evaluate strategies, client risk evaluation, ESG scoring, portfolio analysts to look at their portfolio. So the technology solves some of the meeting problems. You come into a meeting, and do I have to grab something off of this third-party CRM? Do I have to do this or that? It's all presented in a technology streamline. We use technology to get to a better price point. So what does that mean? We've got a poll question about execution. So a better price point is execution that gets price improvement. So the employing technology to get better execution is a real value. We've all been hearing about Schwab and other custodians going to zero on their commissions, but when you do that, improvement opportunities. So that should be a hurdle that people should look at, and our technology can solve that. In the lending of shares, in the borrowing of against for market access reporting. Again, for advisors, we employ technology to take care of those problems and make it a holistic experience. Again, it's a very disruptive space. There's a lot of people, Robos, Goldman Sachs, Vanguard, they're all jumping in. My lawn service is asking me, when are you going to retire? What are you going to do? So everyone's got, they're trying to manage my assets. So we want to help the advisor employ technology to help them meet with their clients, manage their assets to a better price point.
I got to ask, just because it always comes up with technology, not just kind of the hurdles of understanding it, but security issues. This is something you guys probably always are thinking about, but as a client, it's something that people think about as well.
Mhm. Yeah, right off the bat, we've got two-factor authentication to get nitty-gritty. We've got all kinds of the way we send messages to clients are very secure. We're a technology company. The semi-co-founder of the company is in charge of security, and he's an MIT grad, Harvard grad, very very well respected in the business, and has locked down our systems very very well. We've never been disrupted that way. We think it's a very big deal, privacy as well. So taking the privacy code of ethics that advisors are used to and applying that with technology to make it even more secure.
You mentioned execution, and we do have our poll question that I would encourage our viewers to take. Let's define best execution. You started to get there.
Mm-hmm.
What's that mean to your firm? Why does it matter? Not, best execution, a very deliberate word there.
Yes, it really is. I mean, when people think of, again, commissions, they think of, oh, how can I get zero commission? What am I really paying for? And it's great. I can show my client I'm getting zero commission. Look at this. But best execution is a real cost factor. And if you follow the math along, best execution will get the advisor and really their clients a better yield. And that's what it's all about, getting a better yield. It gives the advisor more room to be maybe more interesting, more nuanced, because he's got more room in the yield to do interesting things. Price improvement is best execution. We've got a third-party group called IHS Market, and they are a transaction cost analysis group, and they've determined for years now that IB has gotten best execution to a point of price improvement. For every 100 shares executed, we're 47 cents better than any competitor. So what that means is, you still pay a commission with us, but it's obviated by this better execution in real numbers.
Frank, what can you add to that?
Well, Rhonda, like John said, we get this question a lot, and basically we answer it just the way John presented it. And I think that, some of the advisors and their clients, they get it, they understand it, but it takes a tremendous amount of technology on our part to make certain that happens all the time. And one of the things that, that you see in the press, in some of the business journals, is that's what we're really noted for, our technology and best execution. And it's consistent every year for the last several years.
Frank, what are firms like yours doing to educate clients?
Well, that's a very good question. And, especially now on the Interactive Brokers website, we have a whole section that is dedicated to education. And it crosses all the different, business segments. So, for example, we have the IBKR campus. So anybody that wants to learn anything about any product can go on there and look at short videos. They can even take tests and test their knowledge. We also have webinars that we do where we invite third parties that some are clients, some are not clients. It seems that a lot of the advisors are interested in covered call writing. So we usually have a number of money managers that do webinars that talk about covered call writing, the benefits and the risk. Another subject that comes up is the ETF investing. So that's very, very popular. And and on top of this, any advisor client or any advisor that wants to learn about Interactive Brokers, then we have all the videos that pertain to our organization, understanding our trading platform, how it works, how to log in, how to create different strategies. One of the things that everybody knows Interactive Brokers is our ability in trading options and our options expertise. So we've introduced a lot of educational models on option, buying a call, buying a put, covered call writing, doing spreads, and they're very easy webinars to go through, and they're usually under 6-7 minutes. and very quickly you can pick it up. And then to complement all of this, we offer a paper trading account. So by having a paper trading account, you can actually trade in real time, but it's fake money. So hopefully when you do the transition to the
You're all
real
set.
transition, you make money.
John, just real quickly, I mean, the clients have gotten more savvy too, right? I mean, there's just so much out there that people can really dig into.
Right. That's really true. And what you find is you want to complement, the advisor needs to complement that, to your point. You need to complement the fact that the investor is savvy. The investor can easily just pull money from you and go to another. Again, divestible assets are disruptible. So you've got to offer technology around that to make them feel comfortable, meaning good reporting, good CRM so they feel in touch. All those things that an advisor does well on top of the technology that drives a better price, market access, lower cost, better financing, all the terms that will make the yield a better experience. That's the goal we offer.
Well, that is how we're going to wrap it up. I want to thank John and Frank for the conversation. Thank you as well to Interactive Brokers.